Sei just dethroned Sui, Polygon, and Aptos in active addresses. BlackRock and Apollo are building on it. DEX volume crossed $10 billion, and yet the price is crawling at 18 cents like it's waiting for permission to move. Something doesn't add up here. And today we're breaking down whether Sei is a sleeping giant or just another overhyped layer 1 with institutional window dressing. Welcome back to the channel, Crypto Fam. If you're tired of missing the next big layer 1 pump, smash that like button and subscribe because we're diving deep into Sei Network today, and trust me, you don't want to miss what's brewing under the surface. Let's get into it. According to a fresh A16Z report, Sei Network just flipped some of the biggest names in crypto. We're talking Sui, Polygon, and Aptos, all left in the dust when it comes to active addresses in September. Over $10 billion in DEX volume in the last 12 months. 3 ETF filings, this quarter alone. Tokenized funds from BlackRock and Apollo now live on the chain. On paper, this looks like a layer 1 success story. But here's the plot twist. Sei's token is still trading under 18 cents. The network is booming, but the price action, frozen solid. So what's going on? Why is institutional money pouring in while retail sits on the sidelines? Is this a classic case of buy the rumor, sell the news? Or are we witnessing early accumulation before a breakout? Let's dig into the technicals and see if we can crack the code. Here's where it gets interesting. Sei is currently trading near its 1.618 Fibonacci retracement level at 17 cents. For those who don't speak chart, that's a potential local bottom, a zone where smart money often accumulates before the next leg up. The VWAP indicator shows resistance around 18.6 cents, and if Sei breaks above that, we could see a retest of the 19 to 20 cent range. That's a 10% move right there, and it could flip sentiment from bearish to bullish overnight. Now let's talk momentum. The RSI is sitting just above 30, which historically signals oversold conditions. When RSI drops this low, it's usually followed by a bounce, especially if volume picks up, and the MACD, it's showing weakening bearish momentum. The gap between the MACD line and its signal line is narrowing, which means sellers are running out of steam. In my opinion, this is textbook accumulation phase. The big players are loading up while retail panics. But here's what really caught my attention. Derivatives data from CoinGlass. Trading volume spiked 28% in the last 24 hours, but open interest dropped 6%. Translation, short-term traders are closing positions, and new buyers are stepping in at lower prices. This is classic rotation. Weak hands selling to strong hands. Futures traders are circling like sharks around the 17-cent level, and that tells me they see opportunity. Now let's address the elephant. The obvious question. Why isn't institutional adoption pushing price higher right now? Simple. Institutional players don't care about short-term pumps. They're building infrastructure for the long haul. Sei Network is leading layer 1 usage, institutions are piling in, and the technicals are screaming accumulation. The question isn't if Sei pumps, it's when. If you found this breakdown valuable, drop a like and check out my other videos where we dissect the next big movers in crypto. Don't sleep on this one. As always, this is not financial advice. Crypto is volatile, risky, and can wreck your portfolio faster than you can say liquidated. Do your own research, never invest more than you can afford to lose, and stay safe out there.